UK growth has slowed to its weakest year-on-year pace since 2012, with output falling in November, official figures show, fueling fears the economy might have stagnated or even contracted over the fourth quarter amid Brexit-driven political uncertainty. News of a 0.3% month-on-month fall in UK gross domestic product in November yesterday fueled speculation in financial markets about the possibility of an early interest rate cut and weighed on sterling. This is the sharpest monthly drop in output since April. The month-on-month fall meant GDP in November was up just 0.6% on the same month of 2018, the weakest year-on-year growth since June 2012. Howard Archer, chief economic advisor to the A-Item Club think tank, said, "There now looks to be a very real chance that the economy contracted marginally over the fourth quarter of 2019, at best it may have stagnated." Official fourth quarter GDP figures are due next month. Sterling was, at 5 p.m. in London, trading around $1.2984, down 3/4 cent on its pre-weekend close. Bank of England Governor Mark Carney and fellow Monetary Policy Committee member Silvana Tenreiro fueled speculation last week about the possibility of a cut in UK base rates from 0.75% if economic weakness persisted. Comparing the September to November period with the preceding 3 months, UK GDP was up just 0.1%. Read more. Ian McConnell, Scottish electorate sees economic truth that eludes Johnson voters amid this willful damage of Brexit. The National Institute of Economic and Social Research think tank estimated, after yesterday's GDP figures from the Office for National Statistics, that the UK economy will turn out to have stagnated in the fourth quarter. It said, the UK economy is on course to post zero growth in the fourth quarter of 2019. Gary Young, Director of Macroeconomic Modelling and Forecasting at the NIES, said, the latest data confirmed that economic growth in the United Kingdom had petered out at the end of last year. GDP was virtually flat in the 3 months to November, and the latest surveys point to further stagnation in December. While there is some evidence of an improvement in business optimism following the general election, it is doubtful that this will do much to change the short-term economic outlook of further lackluster growth. UK manufacturing output plunged 1.7% month-on-month in November. Services output fell 0.3%, but construction grew by 1.9%. Mr. Archer said, the economy had a very poor November as GDP fell 0.3%. This was the largest month-on-month drop in GDP since April, when the economy had been hit by destocking after the UK's exit from the EU on March 31 was scrapped. Chris Williamson, chief business economist at IHS Markit, said, the latest GDP data add to signs that the UK economy stagnated at best. For more on this story, visit the news article link.